This is the luxury world. Get inspired with us today and tomorrow. One of the frequently asked questions among the watch community revolves around predicting when the prices on the secondary market will cease their decline. The ongoing discussion seems to revolve endlessly around the persistent downward trend in prices each month, prompting the inquiry about when this trend will stop and how near we might be to the market's bottom. The Rolex market has been on a roller coaster ride in recent years. Prices for the iconic watches have skyrocketed, only to fall back down again. So, when will Rolex prices stop falling? In this video brought to you by the Luxury World, we decided to directly confront and tackle the question at hand. We will discuss thoroughly everything you need to know about the Rolex prices. If you still have not subscribed to our channel, we encourage you to do so now to stay informed about our future videos. Several factors could affect the future of the Rolex market. The global economy is one of the most important. If the economy continues to grow, then demand for luxury goods like Rolex watches is likely to increase. This could lead to a stabilization of prices or even a slight increase. Numerous factors come into play, and any changes in these factors can influence the extent and duration of price falls. The primary focus should be on two crucial questions. Firstly, understanding how the market reached its current state, and secondly, identifying the metrics that can gauge the market's current health. Rolex prices have been on a decline for 20 months, experiencing a drop of over 30% since their peak, as indicated by the Rolex Market Index. This index monitors the performance of 30 highly traded watches on the secondary market, based on annual transaction value. It undergoes a yearly rebalance, with its inception dating back to January 2017. Examining the approximately 6-year history of the Rolex Market Index reveals 3 distinct phases. Initially, there was a period of relatively steady growth from the index's inception until around 2019. This phase coincided with the surge in online media and the increasing prominence of online sales for luxury watches, driven by events like the record-setting auction of the Paul Newman Daytona in 2017, and the introduction of highly popular models such as the Tudor Black Bay 58 in 2018. Another factor that could affect Rolex prices is the supply of watches. Rolex is currently limiting the production of its watches, which has helped to drive up prices. However, if Rolex decides to increase production, then this could lead to a decrease in prices. In early 2020, the impact of the pandemic became apparent, leading to a sudden surge in prices at an accelerated rate compared to the preceding period. Cryptocurrency was part of this speculative bubble, as people believed they could invest in a watch, anticipating a later or even immediate profit due to the perceived continuous rise in prices. Simultaneously, enthusiasts and collectors experienced the culmination of a long-term trend in the increasing popularity of sought-after watches. This trend extended beyond Rolex, including models like the Daytona, Submariner, Skydweller, and GMT Master, as well as offerings from other brands such as Patek Philippe, Audemars Piguet, and Richard Mille. Acquiring a watch at retail, like a Daytona priced at $133,000, was not uncommon for those with a gut relationship with their authorized dealer or due to their position on the waiting list. Many saw this as an opportunity to flip the watch immediately for a profit, or in some cases, to purchase it at a higher price with the expectation of selling it for even more. As the secondary market prices appeared to consistently rise, brands, however, seemed either incapable or unwilling to increase supply to meet this heightened demand. Finally, the popularity of Rolex watches is also a factor that could affect prices. If Rolex continues to be a popular brand, then this is likely to keep prices high. However, if Rolex starts to lose popularity, then this could lead to a decrease in prices. Entering the third phase in March 2022, which continues for the last 20 months, we have witnessed an almost continuous decline, resulting in a reduction of over 30% from the market peak in our index. Despite this extended period, there hasn't been a discernible inflection point indicating a stabilization or an upward trend in prices. Given a foundation of genuine collectors and enthusiasts who acquire watches for personal use, there exists a limit to the speculation the market can sustain before becoming unsustainable. Simultaneously, the decline in secondary market prices aligns with reductions in prices for various alternative assets. There were only so many buyers willing, or financially able, to acquire watches at excessive prices, such as Daytonas for over $50,000. This led to a significant exodus of speculators, causing a subsequent decline in prices. This narrative encapsulates the factors influencing the current state of the market as of November 2023. Now, addressing the second crucial question raised earlier about assessing market health, let's consider 3 key factors that can provide a high-level understanding. The initial factor revolves around the age of inventory currently present in the market, indicating how long products have been available for purchase. Currently, we observe a 3-year high in the median age of inventory for watches. This means that half of the watches currently available for purchase have been on the market for 100 days or more. The second factor, denoted as the turnover rate or absorption rate, measures how rapidly inventory is being sold relative to the overall supply in the market. The absorption rate is currently at a 3-year low, indicating a significant decline compared to around 2021, when there was roughly a 30% turnover every month. This turnover peaked in January 2022, during the market's height, with an estimated 40% of the market's inventory turning over at that time. Since the downturn, the turnover rate has markedly decreased. The third factor pertains to the total supply available in the market, specifically focusing on the inventory of the 30 most coveted Rolex watches. In the Rolex Index, we find ourselves nearing a 3-year high in the amount of inventory for these highly sought-after watches. Despite the demand for models like the GMT Master, Daytona, Submariner, and Yachtmaster, there is a notable increase in availability. There are twice as many of these watches on the secondary market for purchase today compared to the beginning of 2021 or even the start of 2022. The current state of the market is notably unhealthy. We find ourselves either at or approaching 3-year highs in total supply and the age of inventory, while the turnover rate is at a 3-year low. This signifies an excess supply in the market, likely resulting from speculators offloading their holdings or individuals losing interest in watches as prices decline. The prospect of reaching a more favorable market condition could take several months, possibly even years. Considering these market health indicators concerning historical trends, a consistent and steady increase or stabilization of prices would be surprising. We are already more than halfway through the anticipated decline, approaching the inflection point. The most significant market volatility occurred in the months leading up to and immediately following the initiation of price declines. Since then, the rate of decline has been more gradual. At present, Rolex prices, based on the index, are approximately 10% higher than they were 3 years ago. While this doesn't outrun the inflation, the most sought-after models, such as the GMT Masters and Daytona, particularly those in steel, still command substantial premiums over retail. While there are Rolex models available below retail, especially in some collections like the Sea Dweller or Yachtmaster, many of the precious metal and two-tone references are priced below retail. As we conclude our exploration of the current state of the market, it is evident that we are navigating through challenging times. The indicators of excess supply, extended inventory ages, and a reduced turnover rate underscore the market's current unhealthy condition. So, when will Rolex prices stop falling? It is difficult to say for sure. However, the factors mentioned above suggest that prices could stabilize shortly. It is also possible that prices could continue to fall if the global economy weakens or if Rolex increases the production of its watches. While challenges persist, opportunities arise, and understanding the intricate dynamics of the market is key. Stay informed and, as always, make decisions that align with your individual goals and insights. If you enjoyed the video, let us know by leaving a comment and giving it a thumbs up. Do not forget to follow our channel for more content. Thank you for watching The Luxury World, and we look forward to having you join us in our upcoming videos.